A sharp escalation of the conflict in Ukraine led to panic in financial markets. This also affected oil prices, which jumped sharply to $97 per barrel. After all, the world's second biggest oil exporter is involved in the conflict, and market participants are concerned about possible disruptions or even halted oil supplies. Now the market is trying to somehow stabilize as today's macroeconomic calendar is bereft of any important releases which could have a severe impact on the market sentiment. However, as soon as there are new reports about increased hostilities near the Zaporizhzhia nuclear power plant, prices will surge again. At the same time, there is an alternative scenario. The current situation may spark renewed talk about the need to form a cartel of oil buyers which view to setting a price cap on Russian oil. Such a step will inevitably cause energy shortages and a spike in its value. At the moment, the market is going through a lull, with the Brent crude oil futures gradually moving towards $95 per barrel, and the quote is in a correction from the variable pivot point of 91.50. To extend its upward corrective mood, the quote needs to consolidate above 98 on the 4-hour chart, and in this case, the way to the psychological level of 100 will open. An alternative scenario suggests that Brent crude will ease the pace of its upward movement and return below the mark of 94.50. And in this situation, the volume of short positions will increase, thus dragging the quote down. In the meantime, panic in the oil market provoked a continued decline in the gold prices. At the moment, investors are rather trying to flee to the US dollar. All kinds of safe haven assets, including gold, are currently of a little interest to market participants. Thus, to keep moving down, the quote needs to fix below the $1,748 level, at least on the 4-hour chart. However, given the largely emotional nature of the current decline, gold may well rebound when the news on the situation in Ukraine takes a back seat. This scenario is likely, especially considering that the asset is oversold in the short term. As for the ruble, it seems to have benefited from this situation. There are two reasons for this. Firstly, many restrictive measures preventing Russia from withdrawing capital and conducting transactions with the Western countries are still in force. Secondly, this can be attributed to higher oil prices and the risk of energy shortages. After all, Russia is the largest supplier. In case of rising tensions and global supply chain disruptions, many countries will clearly try to address the energy problems with the help of Russian supplies. Thus, the dollar-ruble pair fell below 59 for the first time since late July. However, its downtrend was short-lived as the price entered a technical pullback almost instantly, and if the price returns above the 60 mark on the 4-hour chart, range-bound trading may well resume. A sell signal will be generated when the price fixes below 95 on the daily chart. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.